What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for the trade desk with the ticker symbol TTD. This was a viewer's request, and thank you for your donation. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. So I did look at TTD long time ago, back here in I believe late January, early February. From there, it looks like we did reverse quite strongly. However, we got rejected multiple times from a previous breakout level. If I put a horizontal line where prices found resistance, you can see the story better. You can see that we broke below this $85 level. We came back and found resistance before continuing lower. Then we came back one more time, and then the third time. So that's a triple test of a previous breakout level. So it looks like this is a strong resistance level now. So we sold off, and now we're pretty much back at the previous low of this move down. So let's take a look at this little uptrend that formed. Prices were being nicely supported by this channel, but eventually prices broke outside of this channel, and then it made the retest for the previous high, could not pass it by a good amount, and we started selling off. This was a great opportunity for short sellers to enter the market, and they took advantage of it. So a very bearish sign once we had that triple test, a break outside the channel, and a little distance away from the EMA. So bears were all over this stock at this opportunity, and they took advantage of it. So prices sold off a pretty good amount. We came back down to the previous low of this entire move down. So is this the bottom? Are we going to get a little double bottom before reversing? Well, not likely. What I think is going to happen, we're going to continue lower to stop out the person who went long right here. There's a bunch of stop losses and orders underneath this level. There's a bunch of stop losses, and there's a bunch of limit orders. So there's a lot of people want to buy right when we break this level, thinking we're going to reverse strongly. And there's also a lot of buyers with sell stops, so that could push down the market harshly. So we'll have to wait and see. But as of right now, I think they want to come down to filling these orders over here at the 54.51 level, and then from there I think we're going to continue even a little bit lower to reach the $51 level, because there's a little tiny breakout over here, and this little consolidation pattern is probably where they want to come back to test this breakout. So that's the targets I'm looking at in the near term. However, I don't think that's going to be the bottom either. I have lower price targets in mind. So let's put some channels on here. You can see this channel was being respected pretty well. Let's go and make it orange. So this is a decent fitting channel, not the best. There's a couple breaks outside, but I think this is the best way to draw the channel. So we had a recent break outside of it. So that shows signs of weakness. And we did go back down to the previous low, so that's a good sign for the bulls. But we don't have to reverse right away. We can usually get maybe 2 strong legs down before having some type of reversal. So as of right now, we're going to continue lower, most likely. I think we're going to reach the low $50 levels. And then from there, we'll have to wait and see what prices want to do. But if we continue lower, I do have a couple of lower price targets in mind. And this will be the first one right here. First, since we kind of made 3 legs down, so this is the first leg, and the second leg is longer, so the first and third leg are usually the same size. So this measure move is already pretty much met. We're right at that $57 level. However, I don't think it looks like prices want to stop. This is a lot of selling, and it doesn't look like any stock is having a good time right now. So I don't think this one's gonna be safe from all the selling currently in the market. So we do have this channel working lower. So prices do have a reason to continue to trade lower. Now let's get back to the other measure moves that I had in mind. This will be the first leg down, and this will be the second one. So this target is right at the $41 level. There's another one that's even bigger. I'll show you guys that right now. I'm gonna conclude the entire move, and this would just be the correction up. And this target is right around that $27 level. So those are the 2 targets I have in mind. You can see that the first target, there was some type of support over here previously. So this is a good base for price action to come back and test this $41, $42 level. And even the lower price target I had in mind, it's also a consolidation area. So normally when you see these up moves right here, there's really no strong support in between it. You can see that this is a strong support at this lower black line than just entire up move. There's no like bases being formed. It's just a strong up move. So price action, once it falls through, it can easily knock out these price levels. It doesn't really have to work through a lot of orders. So looks like the first one is at the low 50s, and if that doesn't hold, we're going to reach the low 40s, and if that doesn't hold, we're going to reach the high 20s. So that's the way I would look at it. If the market is super bearish, we can just go right to that $28 level and find no resistance at all at these higher price levels. We'll have to wait and see. I don't know if the market is that bearish, but it wouldn't surprise me, and I'll show you why on the weekly chart. So here's the weekly chart for the trade desk, and you can see that most of these price bars for about a year was inside of this sideways action, this sideways range, and we had a little break right here, which led to a little break on the opposite side, and then prices fell back inside the sideways range. But now we're back at the lows, but I don't think we're going to stop here and just reverse to the top. It's a possibility, but just with everything going on and the bearish signs on the chart, it looks like we're going to get a break again on the bottom side. But this time, if we get another break, that's 3 breaks of the pattern, and normally we don't just reverse to the opposite side and get a break on that side. Normally when we get the third break, it's usually the successful one. So I highly doubt that we're going to break the bottom of this range and fall back inside of this yellow sideways channel. I think we're going to continue lower. So if we do continue lower, this measure move of the range can be a possibility, and it's right at the $18-19 level. So that's something to keep your eye on. Let's take a look at the other measure move that I had on the daily chart. This was the first move down, and we could potentially be in the move of the second one right now, and this one's right at the $29-28 level, like I said previously. So the range move is pretty low. However, it's not surprising to me because it's back at the 2020 lows, and that's where a bunch of other stocks have retraced to. For example, let's take a quick look at PayPal. You can see that PayPal on the weekly chart had a huge up move, a down move, and now we came back right to that 2020 starting point of the entire up move. Let's take a look at Square. Square's another one, very similar chart. We had this entire up move, and now we're coming back down to the 2020 starting point. We are finding some type of support because Square was super oversold, so we don't move in a harsh straight line. We're gonna have some retracements, but it looks like it's targeting the 2020 lows. Now let's look at another one. I can go on, but let's just take a look at Facebook for the last one. Again, up move. Now we're selling off strongly right to the pretty much starting point of that 2020 up move. So very similar patterns across the market. So it can be a repeating pattern, something to pay attention to. So I doubt that the trade desk wouldn't follow that if a bunch of other bigger companies are following that type of pattern. So that's why I believe this measure move might play out as the worst case scenario. It could be worse, but that's what's showing me right now. I'm not looking at really low price targets like over here or anything like that. I'm looking at what the chart can tell me, and the chart can tells me that the $17 or $18 level is attainable. So I could be wrong. That's what I see in the chart, but we'll have to see what the price action wants to do at the end of the day. And as right now, it looks like it wants to continue lower. So that's all I have for the trade desk. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel since you might be surprised what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel since I want to deliver great content to you guys. See you next time, and bye.